Thank you to everybody who's registered for the webinar today. Today we're going to have a little bit of a look at SMSFs and investing in cryptocurrency. This presentation isn't an endorsement of investing in cryptocurrency, rather just some of the issues that you should be aware of and some of the interesting things about cryptocurrency and how they interact with an SMSF. Okay, we'll just have a look at the presentation. So my name's Melissa Harrison and I'm one of the policy advisors at the association. I also have a double degree in international business and international studies, a graduate diploma in taxation, and I recently completed my graduate of laws in 2013. Just getting the slides right. Okay, on your screen now, you should be able to see the Trustee Knowledge Centre. This page here is where you'll be able to go and have a look at information available to our trustees. In there, you'll see the search bar where you can search for things on cryptocurrency. You'll also be able to have a look down the bottom of the screen, which shows our upcoming webinars and any other information relevant to trustees. Up in the top right-hand corner, there's also a Find a Specialist, and this allows you to find a specialist in your area that will be able to advise you in regards to SMSFs. When you have a look at the Knowledge Centre in the search bar, you could also search for cryptocurrency, and that will provide you information about today's session. The association also released a paper in February called The Cryptoness of Cryptocurrency. So that's quite a good paper to read in conjunction with this presentation as well. So when you have a look at that paper, it leads you through some of the cryptocurrency as a payment system, and it also has a look at the volatility of cryptocurrency as an investment. I think when you have a look at the paper, it has a look at the rise and fall of cryptocurrency from November last year, and that in fact it did fall about 66% in 6 weeks. So that is also an interesting read. Today we're going to go through a few things. So we're going to have a look at the tax treatment of cryptocurrency. These will depend on individual circumstances and on the individual circumstances of your SMSF, but it is just interesting to have a look at how jurisdictions do treat cryptocurrency in Australia. We'll have a little bit of a look at GST and digital currency given the change of law from 1st of July 2017. Some of the regulatory issues to consider with your SMSF, including the investment strategy and the fund's governing rules. We'll also have a look at the rules around ownership and separation of assets, and also valuation issues, related party transactions, the sole purpose test, and then we'll have a quick look at pensions and benefit payments when using cryptocurrency. Okay, so cryptocurrency then, what is it? So cryptocurrency and the term digital asset or digital currency are often interchangeable. Cryptocurrency is really just a subset of that digital currency. So digital currency can refer to other things such as electronic money, things that hold value electronically such as frequent flyer points and gift vouchers. And it can also refer to currency that used in different platforms such as online games. So an online gaming platform might use its own currency that's only available in the game, and they use that to trade up their characters or to buy tools, etc. in the game. And often this can be purchased with fiat currency, or you can then sell things in the game on the outside market, but not using their currency, using the fiat currency. The key features of cryptocurrency is it is a digital asset. It also uses a distributed ledger technology in a permissionless blockchain and a consensus mechanism to agree on the value of the transaction. The system itself is not intended to be controlled by a central authority or a regulated body. It's really meant to be quite decentralised. But in traditional, there are parties that do get involved in cryptocurrency, and things can change within the cryptocurrency within the consensus of the community. It is secured by cryptography to prevent counterfeiting and fraudulent transactions. So this is a bit of an issue with digital currency and cryptocurrency in that it can be spent twice or more than twice where the file is recreated. But the more complicated the technology behind the cryptocurrency, the less likely that this is. So Bitcoin is the best known cryptocurrency in Australia. There's probably about 1,300 other cryptocurrencies, and this is growing. Not all cryptocurrencies will be the same. They'll offer you different rights. And that number is continually growing and continually evolving. Some of the more known cryptocurrencies, they're sometimes referred to as alt tokens or altcoins. Ether, Litecoin, Ripple, Monero, and Dash. So how does cryptocurrency work? So cryptocurrency is built on a blockchain technology. It's decentralized and it's a distributed ledger that can record transactions between parties, and it's managed autonomously using a peer-to-peer network, usually with computers around the world. The blockchain is used to record transactions across many computers so that the record cannot be altered retrospectively and without the alteration of subsequent blocks and the collusion of the network. As the size of the network grows, it becomes a network that is less easily to be corrupted, and by decentralizing the data, the blockchain makes it transparent to everybody involved. The next slide that we have is a bit of a visual representation of how cryptocurrency works. So this is having a look at if you want to send cryptocurrency to somebody else, and just a little bit of an explanation visually of how that blockchain works. So in the first picture, what you see is A wants to send cryptocurrency to B. Then the second is the transaction is represented online as a block. The block is then broadcast to every part in the network. As you can see, the network's there, and those in the network approve the transaction is valid. The block can then be added to the chain, which then provides an enduring and transparent record of the transactions. And then after this all happens, the cryptocurrency moves from A to B. One of the other features of cryptocurrency is having a look at the wallets. So the wallets is where the cryptocurrency is actually stored. Different wallets will have different security features. A wallet is the software program, and it stores the public and private keys that interact with the various blockchains to enable users to send and receive that cryptocurrency. And also the wallet allows you to monitor the balance. The wallet doesn't actually store coins, though. It's just an interface for the blockchain and enables users to send and receive. The security of the wallet will depend on the type of wallet you have. And the thing with the wallet is because it's online, it's probably the most vulnerable part of the cryptocurrency platform of being able to be hacked. And it's often irreversible. Unlike other transactions that may be fraudulent or hacked, such as credit cards, there you may be likely to get any fraudulent transactions back, but it is unlikely with the cryptocurrency wallet if that's hacked. Fraud is also something that's talked about a lot with cryptocurrency and hacking. Probably one of the biggest hacking and most famous is the one of CoinCheck, which happened on Japan's large digital exchange. With this hack, though, the investors were quite lucky because they were able to get some of their investment back. Now that just shows you the amount of cryptocurrency that is going through these exchanges, but that won't happen with all hacking attacks. Now with cryptocurrency, the public key is coupled with a private key, which is a significant tool to ensure the security of cryptocurrency. When a transaction is initiated, the wallet software creates a digital signature by processing the transaction with the private key. This upholds a secure system since the only way to generate a valid signature for any transaction is to use the private key. So the problem here is that you need to have a safe space to store that private key, because if it's lost, it's probably unable to recover it, and then you won't be able to access your wallet, withdraw any Bitcoin, or transfer any of the coins. So it's imperative then to save that private key in a safe space. So transacting in cryptocurrency, cryptocurrency can be acquired on exchanges through peer-to-peer transfer or through mining. It's also accepted as a means of payment for goods and services. So you can use it to buy a coffee, and more recently, I think you could also use it to purchase a property. It's also acquired as an investment, but it can be volatile in value. Apparently, cryptocurrency is also now available to purchase from news agencies, which is quite an interesting concept when you have a look at cryptocurrency, and it was meant to be sort of online through peer-to-peer transfers. But by allowing you to buy it from a news agent, it's really putting that storefront on cryptocurrency and allowing you to buy it seemingly from a real person. So that's an interesting development in cryptocurrency, and I think it's Bitcoin and Ethereum which can be available from these news agent sites. Cryptocurrency can be used by acquiring it from cash or debit cards or credit cards. However, it is important to note that some jurisdictions overseas and in Australia have banned the use of credit cards for purchasing cryptocurrency. So one of the reasons that's cited for this is just because of the volatility, and the value can change a lot, so it may increase debt. It also has limited recourse against the asset. And also because it's not regulated by the government authorities such as other currencies. So you will not always be able to use a credit card to purchase cryptocurrency. Okay, so we're just going to have a quick look at the income tax treatment of cryptocurrencies. Often the outcome of income tax will depend on individual circumstances, but in Australia, the income tax of cryptocurrencies, it's not considered to be money or foreign currency for the purposes of the tax law. So the way that the tax law looks at cryptocurrency is to classify it as a property for the purposes of CGT assets. So that will mean that on the disposal of cryptocurrency, you would either have a capital gain or a capital loss. If you're doing this within your self-managed super fund, if you held it for greater than 12 months, then you may be eligible for the discount of that, but any amount will be included in the fund's assessable income. Another interesting thing that can happen with cryptocurrency is chain splits. Sometimes they're referred to as, they can be similar to hard splits or forks, or soft forks, hard forks. And what this does is it's members within the crypto community, they want to see the cryptocurrency go another way, maybe because the transactions are too slow, it takes too long to transfer the cryptocurrency. So they split the chain, and this can result in an investor or a holder of the cryptocurrency receiving new cash. So it happened with Bitcoin, where they received Bitcoin holders. The ATO takes the view that when you receive the new currency, you don't derive ordinary income at that time or make a capital gain at the time you receive the currency. But what you will happen is you'll make a capital gain or loss when you dispose of this new currency. Another interesting thing with cryptocurrency is also initial coin offerings. So initial coin offerings are a way for the developer of a new cryptocurrency to raise funds for their development. So they'll issue ICOs or initial coin offerings looking for investments. Now, it's important to note with ICOs, you won't necessarily get an investment in coins. You might not be issued with actual coins, depending on how much investment they're able to raise. Nothing may come of it, or you may just get access to the platform or rights in any future product that they develop. With ICOs, what they often do is release what's called a white paper. And the white paper in there has the benefits of the investment. So it can be quite a helpful document for you to understand what the ICO is and what the developer is actually issuing to you. Any tax outcome, of course, will depend on the actual rights that are invested here. You'll also notice that on ASIC's Money's website, I think it's MoneySpark website, they have some quite good information on ICOs and things to look out for if you're investing in them. Sometimes they may be a scam. Other times also it's important to note that they don't, despite their name, they don't have the same disclosure requirements that an initial public offering will when they have their disclosure documents. So this is just something to be aware of. There's also been a change with the treatment of GST and cryptocurrency from the 1st of July 2017. So previously, GST purposes, it wasn't treated as money. And so this could relate in double GST on the purchase of Bitcoin or cryptocurrency, and then when you use to exchange it for goods and services. So it was treated like a barter transaction for GST purposes. From the 1st of July 2017, the GST treatment now aligns with the treatment of money. It hasn't changed the definition though, and it's not accepted as money by the Australian government, and it didn't change the law for income tax purposes, but for GST purposes it will receive the same GST treatment as money does. Just as a side, GST and SMSFs, it's not always affected by SMSFs. This is because SMSFs don't need to be registered for GST when they have a turnover of 75,000 or less. So often because an SMSF's investments include input tax sales such as financial supplies, things such as shares, or renting or selling residential premises, you won't reach this turnover threshold. So you won't be needing to remit GST to the tax office. But if you were investing in cryptocurrency, you would notice that there's no longer GST on the purchase of that crypto. So the next question then is, can an SMS invest in cryptocurrency? So the question here, this is just really not a discussion of should you invest, but just having a look if you can. So there's nothing in the law that specifically prevents an SMSF from investing in cryptocurrency. How there are a number of regulatory considerations that you need to have a look at. So the first of these, that it must be allowed under the fund's trust deed. Now, because in Australia, cryptocurrency isn't defined as money, and it also won't be a share or a security in most cases, you need to ensure that your trust deed allows for the contribution of cryptocurrency or the purchase of cryptocurrency. It also needs to be in accordance with the fund's investment strategy and government rules. So as a self-managed super fund, every fund is required to have an investment strategy, and this needs to be reviewed regularly. As part of that investment strategy, you also need to understand the risk. So if investing in cryptocurrency, it's important really to understand the risks involved, the volatility of the asset, and also the safety of the asset if it's subject to hacking or because it's not necessarily regulated by government. So the investment strategy also asks you to have a look at cash flow expectations as well in being able to provide for both retirement and also having a look at the liquidity and your ability to meet any expenses of the self-managed super fund. The investment strategy, just a side note, also requires you to consider insurance for your fund as well. But you need to then just ensure that if you are going to invest in it, that it's allowed under the trustee and that it's being reviewed as part of your annual or regular review of your investment strategy. Another thing with cryptocurrency, I think, compared with other assets, it's very difficult to show record keeping, and this can be difficult for a self-managed super fund to show that they actually own the asset. The other thing is that you need to keep your assets separate from personal assets. So where members are also trading in cryptocurrency, this can be a bit of an issue, and it can be difficult to show the separation of these assets here as well. One of the other issues is because it's not defined as a security or money, it's very difficult to rectify mistakes if it's held by the member in their personal capacity rather than the trustee, because you're not able to make an in-specie contribution to correct anything. So when you're having a look at the separations of assets, it's very important to make sure that you keep anything separate from what you're doing personally, and also making sure that you record anything that you're doing. An intention to do this after, or intention's not enough and you can't recreate it after. So you really need to consider how to do this before investing and before making those transactions, and that's including keeping any wallets separate as well. Okay. So record keeping is quite difficult, I think, for an SMSF. These record rules are from the ATO website, and on there it shows you how you can record things for CGT purposes. So it is helpful tips for recording for self-managed super funds. So what it requires is the date of the cryptocurrency transaction, also the value of the cryptocurrency in Australian dollars. So this can be taken from, there's many reputable online exchanges which will record the value of the cryptocurrency, also what the transaction was for and who the other party was. So this can be quite difficult because you often don't know who you're transacting with. So even if you just include their wallet address. So it is also advised that you probably seek advice before investing in cryptocurrency, or speak to an auditor about some of the requirements and how you can meet the record keeping for self-managed super funds. Some tips are, of course, to keep the personal and SMSF wallets separate, use an SMSF bank account and email address for transactions. You can may also be able to complete a declaration of trust, but you need to make sure that something like this will be accepted by the auditor, and also just keeping all the trading transaction reports that you can. Valuation can also be an issue, but normal valuation rules will still apply. Can be difficult because the valuations are changing constantly. It does need to be valued in Australian dollars. So to get this value, you can get the fair market value that again can be obtained from these online websites which publish the rates publicly. The ATO have stated on their website that for SMSFs who need the June 30 balance, member balance, they will accept the closing balance that is published on one of these reputable websites. The other issue that you will have also is the related party transactions. So as an SMSF, you have related party restrictions. Generally, a cryptocurrency won't be defined as a security, therefore it won't be able to meet any related party exemptions. And also because it's not defined as money, you won't be able to make that contribution in a cryptocurrency. So it's important in knowing that if you need to correct mistakes between members, and also just being careful of that record keeping as well is very important. Of course, with every investment, it's always thinking about sole purpose. So the sole purpose test for self-managed funds is about providing retirement benefits for trustees or their dependents if a member or a trustee dies before retirement. So in investing in cryptocurrency, there's a few places where the sole purpose test may be breached. So in some circumstances with cryptocurrency, you may receive a fee or a commission with your cryptocurrency investment, and if this is paid to the trustee or the member personally, this may be seen as a breach of the sole purpose test. So it would just be having a look at the intention and the reason for entering into the investment. Another interesting thing with cryptocurrency, as it is a CGT asset and property, under the CGT rules, you can have a personal use asset, and where you hold personal use assets under $10,000, these are exempt from capital gains tax. So there is an argument that cryptocurrency can be held as a personal use asset, for example, if you're using it just to buy or sell goods. The ATO views if the longer you've held it is more likely to be an investment, but it's probably a lot harder for a self-managed super fund to argue that they're holding cryptocurrency as a personal use asset, because it probably wouldn't meet the sole purpose test if you're just using it to purchase goods or because you found it interesting and wanted to invest in it. So that's something just to be aware of there as well. And then just having a look lastly, it's also important to note about pension payments and benefits. So when you have a look at cryptocurrency, where a trustee satisfies a condition of release, the SMSF can make a specie payment by way of transfer of cryptocurrency. But if it's a pension, the regulatory requirements are that this must be made in cash. So you need to be careful with this. Also, of course, it's important with any fund of diversification and ensuring that the assets that the fund holds are able to meet not only your liabilities, but the pension as well. So if the cryptocurrencies, well, if you need to use it to make these payments, also considering any CGT consequences at the time of that transfer to the member is also quite important. Okay. So that's probably just a bit of an overview of some of the things to consider if you're having thinking of investing in cryptocurrency for a self-managed super fund. But it is, I think, really important just to have a real understanding of the risks that can be involved. And that's where it's recommended that you see an advisor to be able to get advice based on your personal circumstances and to ensure that you're meeting the record keeping requirements, ensuring that you're updating your documents accordingly as well. So we've also had a look at some of the income tax and GST treatment. That information, if you're interested, is also available on the ATO website. So just ato.gov.au, or you can just search cryptocurrency. They also have a little bit of information on self-managed super funds and investing in cryptocurrency. Some other resources that you can use is also the ASIC Smart Money website. So they do look at the initial coin offerings. They also have a little bit of information on cryptocurrency as well. So that's another good resource. But of course, there's also their Trustee Knowledge Centre. So on there, you'll have the paper that we released in February, and there'll also be a further paper released today that discusses some of the issues that we've gone through today. But I'd really like to thank you all for registering for the webinar today, and hope that there's some information there that has been useful for you. We probably have time if there's any questions. Okay, maybe not. So thank you all for registering. We'll let you all know when further information is available. Just encourage you to go to the Knowledge Centre as well and put in their cryptocurrency to find the other resources that we have available. So thank you for your time.